now joined by James Mutuku. He is the head of financial markets at Standard Chartered, and we'll be looking at the policy rate decision that the central bank, the Bank of Uganda, took earlier today by reducing the lending rate by 50 basis points to about 11.5%, saying that the economic growth rate remained below potential. For more, as I mentioned earlier, I'm joined there by John Mutuku. He is the head of financial market at Standard Chartered. John, maybe you could give us an indication. James, maybe you could give us an indication. Was this expected? Was a rate cut expected?
Actually, the rate cut largely unexpected in the market. It came as a surprise, but largely we think the Bank of Uganda did the right thing. GDP growth at this point of time is a bigger concern for them. Looking at inflation, I think the Bank of Uganda is very, very comfortable as to the inflation trends in the market. From the statement released, I think we can tell the bank is very comfortable that going into medium term, i.e. mid-2014, the inflation rate should be around and about the targeted inflation rate of 5%. So we think at this point,
I'm glad you James.
Very confident.
I'm glad you brought up inflation, because on that one they did mention that they see inflation dropping in the next 2 to 3 months to about 5.5 to 6.5. Is that feasible?
I think it is. We've seen food prices coming down. If you clearly remember, Uganda 3 months ago we had a drought. Rains came in at around September. Food hit the market around and about November, December. So we have seen food prices come down drastically, and I think looking at the other international factors such as oil, that has also come down. So I think that's feasible from a Bank of Uganda point of view for them to say that they think inflation will be around and about their target rate.
And what is the trickle down, James, you see having on the currency?
The currency is very stable. We've seen a very stable currency in spite of the muted corporate demand that comes in normally at the end of the year. I think we are looking at tomorrow's auction of the 3-year bond and the 15-year bond to see if there'll be a lot of big foreign participants. We do expect a lot of foreigners to come into the market to participate in the bond auction. And we might see some strengthening of the Uganda shilling. But really, going forward, the current account deficit remains high, and going forward, we should see the Uganda shilling going into mid-2014 losing a bit of ground.
Thank you, James, for joining us. Of course, current account deficit is also a major challenge in Kenya, and we'll definitely